record. For me, I think in terms of having setups, it's a good thing to have a setup throughout the week and just wait for your setup to play out. In that way you can be able to see what actually happens in the market, and for you as an individual it can help you to like really grow, you understand. So if you have a setup, it's best for you to have that setup and wait for it. Don't just go out there and take setups from other people or try to scalp the setup or something like that. Wait for the setup, and then if the setup comes to your side, that's when you're going to take the setup. But then if it doesn't, then let it go, let it play. That's why you have a lot of setups, right? That's why you have a lot of setups on your watch list. So I think that is one important rule that we should mention before we go any further. So it's stick to your setup, right? Stick to your setup. Have a setup, stick to it. If it doesn't play out, it's fine. Don't go out there chasing the market. If it hits your stop loss, it's fine. Just go there, check out what did you do wrong and how you can improve next time. You understand? So another thing, another important thing that I would like to mention again is that when you're trading a particular style, for example, let's say for us, we are trading this method, right? We know what we're waiting for. So if you're trading, if you're trading a particular style in a particular style, and then let's say, for example, you go to social media, and then when you get to social media, you find people doing this, selling, and then your setup on your side based on your strategy, it says buy. But then you go and see people selling, you say, hey, man, this guy, he makes money. I know him from Instagram, he's been making money. So he says sell, so let me take the sell and this and this. That will be very dangerous for your account, you understand? So if you have a setup, or if we have a setup as a team, it's always good to wait for the setup to play out or for the setup to occur. Especially if you check something, if we have a setup on the 4-hour time frame, it is most likely to play out after a day or two, right? It depends on the time frame. So if it's on the 4-hour, it is most likely to play after a day or two. So it is important for you to wait out for it to play out. And then when you catch the trade, again, the most important thing, when you catch the trade now, one thing I realized is that how far are you willing to take the trade? But if the structure is telling you that, let's say, for example, like here, let's say the structure is, you can see that the structure is telling you that we have a possibility that we can move all the way down, right? But then what most people do is that when you find a great trade like this, right, and then you're going to be taking profits here based on the movement, you take profits, and then now you're just looking for something that's no longer there, instead of getting into those trades and then waiting for your setup to occur, because you waited for this to occur. So you must also wait for this setup to occur, right? You must wait for both setups to occur, because you were able to wait for the setup for your setup to take the position. So you must also wait for your setup to take your profits, right? So you know that you don't just go. That's why you avoid opening and closing the charts every now and then, So once we have a setup, let me say like this one. So this will be the first setup that I'll be looking for in the week. This is what I'm looking for in the week. So if I go to the daily, let me just go to the daily. Okay. Yeah, I am on the daily. PK, if you remember, this setup of Audusd, this cell way back when we first met, I remember I was showing you that this structure here is going to be an impulse, another correction, and we might have a move all the way to the downside, right? If you remember, I once shared this with you back then. So now, basically what's happening here, guys, for me, Audusd, there are two things that might occur that I'll be looking for in this week. So this is my daily structure. This is my daily structure. I can see that, okay, this for me is an impulse, this is a correction, this is an impulse, this is a correction, right? So for me, I don't need to go and do anything else. I will not go and draw a trend line which is coming here and say, no, this trend line is broken. You see, I will not go and draw this trend line and say, no, the trend line is broken here. What if now it's going? No, I will not do that. I'm going to look at my current structure here. Okay, Donald. So if this is how my structure looks like, this is how my structure looks like. So one thing I realized again, while we're still at Audusd, let me just do this. While we're still at Audusd, one thing I realized is that Donald, you have a problem when it comes to drawing structure. You don't necessarily understand sometimes. Sometimes you draw it correctly, but then sometimes you tend to like mess it up sometimes, you know. So that is what we're gonna deal with also right now. So for me here, this is first things first. You must know how to identify your area of value. Okay, you must know how to identify your area of value. So your area of value, that is where you're going to draw your horizontal ray line. Okay, that is on your area of value. So if you know where, and another important thing is that when you draw this area of values, don't get them mixed up. Okay, because in every time frame there is an area of value. Okay, but for us using our strategy, the main important area of value is in the higher time frame. All right, sure. The main important area of value is in the higher time frame. Okay, so now basically here, so this is what we do. I've opened the chart here. Okay, I've opened the chart. So today is a Sunday. Today is a Sunday. I want to start analyzing this chart. It's a Sunday, right? So what I'm going to do, of course, because it's a Sunday, I'll start from the weekly, okay? Because it's a Sunday, I'll start from the weekly. So when I open up the weekly chart like this, now, this is what I'll be looking at, okay? You need to understand, So this is previous price. This is previous price. This is where price is coming from, right? This is where price is coming from, and this is current price, right? So now, what we're going to look at now is our area of value based on the previous and the current price. So it's always good to look left, okay? You must look left. So based on exactly where we are right now on the weekly, you can see that this area here, this is my area of value. And then if price is to break more to the downside, this area here, this will be my area of value. This is where I'll be expecting the market to react from, right? Anything which is not at this area of value, I'm not going to take it, okay? Anything which is not in this area of value, I'm not going to take it. So now, let me just take the lowest low and the highest high for this case. I've got the lowest low, I've got the highest high. Now, I want you to, again, understand something. It's not just a matter of drawing impulses, impulses and corrections. We need to understand exactly what type of structures are we having in these impulses and corrections, right? Because for you to can say that, someone can say, as I was saying, for example, someone can do this, right? Someone can do this and say, no, this broke out, so it's just gonna, you know, that is very possible. That is very possible. We do not rule it out. But the question now is, how is the market progressing? How is the market moving, right? How is the market moving? So what we can see now here is that we have this impulse, right? This is a big impulse. As you can see, this is one movement, right? It's a movement in one direction, high momentum movement to one direction. And then after this, we have this correction, right? We have this correction. So after getting that correction, of course, we're going to do what? We're going to draw it in. It will give us a nice structure there. That is our correction. And then immediately after this correction, what happened? We had another impulse. And then after this impulse, what are we having? Of course, the nature of the market. Don't be surprised by this movement here, right? Don't be surprised by one impulse and say no, because that move was so impulsive, then it means that we might be reversing. Don't be, because if we look at the nature of the market, we're still overall in a correction, okay? We're still overall in a correction. Like how we would say, we would use the 80-20 rule. We'd use the 80-20 rule. So using the 80-20 rule, when we look at this market structure here, when you look at this market structure here, we can see that 80% of the move, you can see that we have both movements here, bullish and bearish movement, right? We don't have one strong movement in one direction, unlike somewhere here or somewhere here, right? Here we have a mixed. So now, from here now, what is going to happen? And let me just remove this ray line and just put it here at this lows. Okay, so now this is my correction. This is my correction. So from here, underneath my correction, I'm just going to connect the lowest low using my structure here, because I understand that this is a correction. I understand that this is a correction. So let me just put this here. I understand that this is a correction. So now from this correction, now I'm just going to connect the highest high to get the best structure. Something like that. Just connect the highest highs. And then now from here, I have this as my last, why do we have this here? Why do we have this ray line here? This ray line here is showing us that on this structure, right, this is a correction structure, but again, this is a market which is moving in a downward momentum, right? So this is the last lower high, I mean. So if this price comes and breaks this, that is when that we can say the price now has turned to be bullish. But then other than that, we cannot say that this price is bullish. Okay, we can say that this price is bullish. Other than that, we're still looking for this as an impulse, a correction, and then a continuation. All right. So now we're just gonna go drop down to the daily. So just go down to the daily now. Okay. So here on the daily, I'm just going to adjust a few things. Remember, don't try to take shortcuts. Don't try to take shortcuts, because if you find me taking a shortcut, it's because, obvious. We've been in the game, and sometimes we just see these things, but it's always good to like check exactly what's happening. So now, when you can see now here, this is our structures here, right? You can see how simple it was to come to this, having these structures, right? So now from here, what we have, right? So this is our top of the structure. This is our top of the structure, of which from here on the daily already we're expecting a third touch of the structure, right? We have the first, we have the second, we're expecting a third touch of the structure, and then a market sell off from here, right? So one thing that I was a bit skeptical about, it was just one thing that I was searching about. I have it here on note. It was that odd Aussie dollar and New Zealand USD investors are running to them because they are far away from the war. So the investors are investing on the Aussie dollar and the New Zealand dollar. They are buying it too much. So that's why we're experiencing a lot of bullish pressure. But if you look at the last part here, if you look at this last part here, you can see that these candles that are coming in here now, they have a lot of wicks, on the bodies. they have a lot of wicks, which means that they're getting exhausted or they're getting tired. They're getting tired as we are approaching the top of the structure. They're getting tired as we approach the top of the structure. So now what I'm going to do here, I'm just going to zoom in into the 4 hour, or before I can zoom in into the 4 hour, I can just highlight an inner structure, which I can already see from here, right? I can just highlight this inner structure, which I can already see from here. So if I can just highlight this inner structure here, I'll adjust this when I go to the smaller time frame to the lower time frame. So this would be, for me, as I was thinking, okay, we have a very much complex, structure there, which is an, you know how this structure is like. So if most likely that if we have a structure like this, most of the time, a structure like this, it can either break to the upside or break to the downside. That's one thing I know about these expanding structures. So now, from here now, I'm just going to say, okay, from what I'm seeing here, I was thinking that this area here, this would be that area for me, which says this is my 1, this is my 2. No, oh, it's not. Okay. So this would be my 1, this would be my 2, and then this here, for me, this would be the middle section, right? This would be the middle section for me on this structure. This would be the middle section here. So I would use this as the middle section. And then from here, I know that waiting for the 3rd touch, it is most likely to go down. But then I also need to go and confirm on the lower time frame, right? And then again, you don't have to do this, but we always have an area of value that we look at. So if I can check this area here on my left here, if I can check this area here, I have this area as an area of value, of course. So knowing mass psychology and how price usually does, of course, it can do 2 things. For me, it can break this area of value, right? Of which this could have been a nice double top formation, but it can break this area of value to the 3rd touch, and then we can get that movement to the downside. So now let's just go to the 4 hour. Let me remove this. So I'm just going to use Audusd to explain, then the rest it will just be the weekly setups. No? So you can just go and practice and practice. You need to practice and backtest a lot. You need to practice and backtest a lot. Okay. So I'm just going to adjust my structure here. Just adjust my structure. It's just like that. Okay. Let me just bring this one inside. Okay. So from here now, it means now I want to understand how is the market approaching my 3rd touch. So this is my 3rd touch. This is where I'm looking for a reaction, right? This is where I'm looking for a reaction. So now again, if you look inside here, we have this area here, which of course, this could still be a double top formation, but in the long run, in the very long run, it can hit here, but by the time it gets here, hey, it's this space, it's a lot of pips, it's a lot of money. So we want to be somewhere there. I would be willing to take a risk entry there at the top. But depending on if I get that 1 hour retracement, or if I get that a formation like this, you know, it's always good to like refer to what happened the last time the market touched the structure. So you can see here, it touched the structure, it gave you a head and shoulder formation on the 4 hour. So this head and shoulder formation on the 4 hour is the one which gave the market this move. So it means that for you to get bigger moves, don't go and see, let me just do this. Don't go and see a head and shoulder forming on the 5 minutes, because I know, Donald, you love 5 minutes and you love 1 minute. So you go and see head and shoulder forming on 1 minute like this, and then you enter. And then all of a sudden the market continues going up, you know, it will be for that time frame, you know. So it's always good. That's why we always confirm with the 1 hour. That's why we always confirm with the 1 hour, because the 1 hour and the 4 hour, those are the ones that are going to give us the bigger moves to the downside, right? So even if you're hitting stop loss, you're missing trades, you're hitting stop loss, the best part about it is, can you control your risk? Can you control your risk? How much risk were you on that trade, you know? So if you can control the risk, it means that for every trade that you hit stop loss, you lost a mere 1%, right? So if you lost a mere 1%, then if you're going to be taking a trade like this one here, let me just do this. If you're going to be taking a trade like this one here, if we look at this trade, let me just put 30 pip stop loss for conservation. So if we're going to be taking a trade like this, that's like a risk to reward of 14.3, which is 6.07%. You know how much that is, with a lot size of 0.01 from here to here, with a lot size of 0.01. I think it's about 400 and something from here to here, with a lot size of 0.01, right? So remember, for the market to move from here to here, it will not happen overnight, right? It will not happen overnight. So that's one thing we need to check again. Like, you also need to check, okay, fine, the market is here at the top. So how long should I expect the market to go down? Just go and look at previous structure. So if you look at previous structure here, let's say, for example, this structure here, when it was going down, right? When it was going down, exactly. And you know, with the 14 to 20%, man, like, that's a lot with the margin that we use, because I realized that for us, the margin that we use, the 1:500, 1% and stuff like that, it's a lot of money. It's a lot. So if that is the case from here, you see, that's a lot with 0.01. And then how long is it going to take? As you can see here, look at this move. I want you to focus on this move here. If you look at this move here, from here, it started on the 13th of January. It hit TP on the 28th of January. That's almost 2 weeks. That's a 2 weeks move. That's a good 2 weeks move. So with a lot size of 0.01, that's a 2 weeks move, right? That's a 2 weeks move. So in a 2 weeks move, you can see in this 2 weeks move, we have the impulse, we have this entry number 2. We have the impulse, we have this entry number 3. And then we have this smaller ones until it hit TP. So let's say we had overall 3 entries here in 2 weeks time, 1 position, 3 entries. That's almost 1K, right? That's 0.03. That's almost 1K. If it's in 2 weeks, 3 positions, that's 1K in 2 weeks time. So if you have that amount of time, you know that in the second week, this already is running risk-free. Then you can be looking for other setups. So you don't have to be looking for your setup every now and then. You'll just be coming and managing your trade. So here in the 4 hour already now, let me just go now to the 1 hour. So this will be my 1 hour. So this market is looking very sexy. You keep it simple. So this will be my 1 hour. So here on my 1 hour now, I can now see, oh, okay, what is happening here? The market is coming to my area. How is it coming? It's not yet bearish, okay? It's not yet bearish. There's nothing that is telling you to sell here. There's literally nothing that is telling us to sell here at this point of time. So now, if I go to the 15, I know now I'm waiting for this third touch, which is possible, right? Which is possible. I can get this third touch, and then the market sells off, okay? So now I'll just go to the 15 to see. Just to finish, you don't need to necessarily always go to the 15 minutes, but just to finesse your positions, you know, just for that finesse. So here on the M15, what I see now, I don't even have to do a lot. That's the 15. So I'm expecting that this will impulse, this is the correction, then this will give us the last move before we get that move to the downside. So that's why you must not just go and dive in, you know. But even though if that's the case, that let me just put this here. If it is the case that we get this move here like this, and then we get that flag, let's say we get that strong move from here, it breaks out, we get that flag here, then we can take this trade from this flag to the downside, right? But this will be a first take profit. Until this market breaks this previous, we're still bullish. So if this market breaks here and comes here, don't come and sell here, don't come and sell here, because this market for me, it will still be bullish. So when it gets here, you just look at price action. You want to see what is happening. Is it going to form like a hover, or is it going to form like a reversal all the way to the upside? Because those are two things involved. That's one thing that I realized. No, guys, you need to understand the structure. And as much as we know the nature of the market, you need to understand the structure of the markets. As the market broke in the previous, for it to say is bullish or is bearish, right? So on all time frames, we see this on the daily, on the 1 hour, on the weekly. Okay. So guys, but again, this meeting is left with like 6 minutes. So if we get cut off, you know what to do. We'll just use the same link. I hope the network will still be on my side by that time. All right. Okay. So now here, if you look at this, and I want you to understand something. If you have an account, let's say, for example, just what we're looking for right now, like you remember that app that we have, that app, Lot Management Pro, that app will tell you that, okay, you are using, let's say, for example, you are going short, you have a stop loss of 26 pips, your target is so many pips, what your risk to reward is, what your risk is 1%, what lot size should you enter on your account, you know, based on your account. You enter based on your account. So you don't just go there every day, you just go 0.5, 0. What. That's why you find my lot position sometimes, or my lot sizes, they change. They do not change based on me taking a gamble. They change based on what am I looking for? What is the risk to reward at that point of time? If you take my 0.12 stop loss can hit 100 Rand with a stop loss of 0.12, you know, but for someone it can go and hit a lot of money for 0.12. So that's how tight we are, right? So this is as it is now. We can see this is most likely to happen, right, before we get this move down, or we can just finish this third touch, finish this, then from here we can do this, or this could be like this. We get this, which comes back here, gives us this head and shoulder formation, and then I move to the downside. But all in all, we are waiting for a move to the downside. And then after this break, after a break of this structure, then the 90% rule becomes active. You know, PK, you know, after the break of this underneath here, we get a break of this impulsively, then the 90% rule becomes active. So let me just try to go through the rest of the piece real quick. I'll also send them through now. So I also have New Zealand USD. New Zealand USD also. On New Zealand USD, we have the same thing as Audusd. So with New Zealand USD, what's going to happen for me, like I was doing last week, I have these two great setups on New Zealand USD and Audusd. So what is basically going to happen for me. I'm going to wait for one that would give me the best probability. I'm not going to take the both of them because it's the same thing. I cannot go and take New Zealand USD and go and take Aud USD at the same time. We used to do that back in the days, but now we know that it's the same thing. You can't be trading the same thing twice, thinking that you're trading two different things, you know. So that's why I have these two beautiful, nice setups. So even this one, I'll be checking which one will give us the most probable setup. But we'll check New Zealand USD. I think there's some major news on New Zealand which are coming this week. You can see exactly. See, so this week you have some news here that are coming. So we'll see how it will play out. We'll see how it will play out. And then New Zealand JPY also. Wow, New Zealand JPY is also looking beautiful. It's also looking beautiful. New Zealand JPY. You can just go check it out. New Zealand JPY is looking so beautiful. Let me just go to the 4 hour. I'm left with like about 2 minutes. So if it cuts me off and we're not done, we'll just use the same. So this is New Zealand JPY. So I can just draw this if I want to, but I just wanted to use the ray line. So I can also just draw this if I want to. See, this is how New Zealand JPY is looking like. So I'll be waiting for the touch here on this structure and then all the way to the downside. All the way to the downside. And then Eurocad, I'll be looking for the third touch here and buy positions on Eurocad. This is how Eurocad is looking like. So I'll be looking for those, for this move to come here. Can either come here and give us mass psychology, comes back here and then go up, or it can just go from the reverse, from the third touch here. But I bet on the mass psychology more. It can just come and break this low and then, or this could be the mass psychology of here. So either way, we are banking on this third touch here and then a move to the upside, okay? So the last one on my side will be Eurgbp, of which, of course, also Eurgbp is the same as Eurocad. So I'll be looking for both of these, which one plays out, which one is going to play out first. So this is what I have. I have a break of the lows, and then we have something like a mass psychology here breaking here. So I'm expecting if we can get an impulse up as mini correction, and then we can maybe get a move to the upside. And you know how this impulsive it is. So we'll just wait and see how this one can play out. Other than that, guys, gold, of course, as I was saying, gold, I still have this on my weekly.